Welcome to the show, everybody. Today in our episode, why nobody ever buys term life insurance. We're going to be discussing the principles of life insurance, where I think a lot of the gurus that you're going to be listening to online, on television, wherever it might be, why I believe that a lot of their advice and their information is skewed. This is just my belief, but I want to discuss with you guys today why nobody ever buys term life insurance. We're going to discuss the differences, and we're going to really dive right into this. Thanks so much for joining. Hey everybody, again, I just want to thank you guys for joining, and we're going to deep dive. It's only going to be about 15, 20 minutes, but we're going to deep dive into term life insurance, and I want to make sure that we are not getting caught up in some of the rhetoric as far as life insurance companies. We're not going to be talking about specific companies. We're not going to be talking about the different variations of term life, because there are so many. And we're going to touch on a couple of things: universal life, we're going to touch on permanent life, but we're just going to touch on those things. There is variable universal life. We're not really going to touch too much on that, but we're going to really just talk about the differences between term life insurance and permanent life insurance policies. So what I want to do is I want to take a step back and really kind of discuss where I think a lot of this goes wrong and where a lot of this goes bad. Because if you were to go online and go on to just YouTube and you're to search through the different gurus, or search term life insurance or permanent life insurance rather, you're going to probably find a lot of opinions from a lot of very popular people who are talking about permanent life insurance and why it's inherently bad, why you should never get permanent life insurance and you should buy term life insurance. And I'm going to argue why nobody ever buys term life insurance, why term life insurance is not something that you ever buy. Okay. And what's important is knowing that there are a lot of people who have a specific opinion. And I believe that that opinion is a skewed opinion, because I don't believe that there is really, in most scenarios, when it comes to products that you are purchasing, especially in the insurance field or in financial products, I don't believe that there is anything that is inherently bad, really, ever, when it comes to this realm of products that we're talking about. There's not much that's inherently bad, but there are certain products that are definitely not going to be a good fit for you at certain times of your life, or maybe ever, based on just who you are, based on your assets, or based on your debts, or how many children you have, or whether you don't have any children, whether you're married or not, whether you're healthy or whether you're sick. There are certain products that are going to be a fit for you and certain products that are not. And there are products that might be a good fit for you right now, but they won't be a good fit for you in 10 or 15 or 20 years. So let's take it back to some of the things that I do agree with. Let's take some of the most popular advice that you're going to receive from financial planners and financial advisors out there, which we have them within our organization. We're happy to help you with those types of services. But there is a very common theme amongst a lot of financial advisors that are out there. And one of those themes, when it comes to things like debt and how you handle your finances and how you remain out of debt, how you can take control of your finances and have peace within your finances. One of those things is to always be attempting to pay on something that is yours, that is an asset. So for example, a car. A lot of financial gurus will say leasing a vehicle is a bad idea for the average person. Okay, we're not talking about businesses. We're not talking about people who are doing a lot of traveling, but we're just talking about the average person, you, a family, wife, kids, etc. Let's say you're going to get a car for your youngest child. Leasing a vehicle for your youngest child, probably a really bad idea. What you're doing is you're giving someone money to borrow their vehicle. You're not accumulating any wealth, or you're not accumulating any equity, I guess is a better word to use. You're not accumulating any equity in that vehicle. And so the idea is, while vehicles are still depreciating in value, that's one of the arguments for leasing, is that you're paying into something and that something is depreciating in value. You're going to make a lower payment. You're going to have something that in your usage always has value. And then as soon as the lease is up, you just start making a payment on something that's newer, nicer, shinier. And so your value is in the object that you have and its usability. Your value is it's not a monetary value. So it takes the idea of shifting value away from a monetary perspective as far as what it's worth financially, and it shifts that value into what it's worth to you emotionally. And that's what leases tend to do for the average Joe. Now, let's press pause on this concept for a minute, and let's say you're an athlete. Here in Arizona, there are a lot of athletes that play baseball and they do spring training here in Arizona. And a lot of them don't live here, but they're here temporarily for 3-4 months at a time. And they come into Arizona, they do spring training at the baseball fields here because the weather is beautiful here in Arizona during spring training. And a lot of these athletes don't want to go through the process of loading their personal vehicle up on a truck, having it shipped over here to Arizona, paying the costs and taxes to have it shipped over here, getting temporary plates for while they're here, temporary registered here in Arizona, and all of those things, and having to switch their insurance to Arizona. It ends up being a big hassle, only for it to be here for a few months. They're not going to use it a whole lot anyways, but they're going to put miles on it. It's going to, you got the climate here in Arizona that's different. Maybe the vehicle's been treated for the climate somewhere else. There's a lot of different variables to take into consideration, but you have people who say it just doesn't make sense. There's not enough financial value in it to overcome the emotional headache I'm going to have to deal with getting my vehicle to Arizona temporarily and then get it back to, let's say, Minnesota or Massachusetts or Arkansas or wherever they're from. Okay. So what they do is they lease a vehicle while they're here. They lease it for a few months. It's an expense. They write it off. It's temporary. And then they're gone. They give the vehicle back. They go home to their home vehicle. This happens a lot. I like to compare this to the process of a lot of times getting term life insurance. Now, the reason why I say no one ever buys term life insurance is because it is a physical fact that you don't buy term life insurance. It doesn't meet the actual verbiage requirements set forth by the Department of Insurance. When you sign a contract and you're paying money on a monthly basis for that contract, that is technically considered you purchasing your way into a contract. But I like to say that you're not buying term, you're renting it. You're renting a term policy. So let's hit the brakes on that concept for just a second, because I want to put it into better perspective. You have a lot of people who say don't rent if you can avoid it. If you can get your way out of renting a home into purchasing a home, that is an asset that you own. It is going to accumulate value. It is going to grow as an asset. It's going to grow. There's going to be equity in that home. And you hope that at some point there are maybe payments that need to be made on that home, on that mortgage maybe, but the amount of money that's owed on that mortgage is less than the amount of money that that home is worth, market value, if you were to say sell the home. So in that case, now you have equity in that home. So it has grown. It has essentially become an asset at that point. That is your break-even point. That is where you win in the process of owning that home. Okay. With term life insurance, you don't ever get to do that. Okay. If you don't pass away, in most cases, and we're not talking about all term life insurance, we're just going to keep it basic right now. But in most cases, your term life insurance policy brings zero value to your estate unless you pass away in most cases. Okay, most. So you have to pass away in order to receive benefit, but it's only for a temporary amount of time. Okay, so just like that person who's traveling to Arizona and they're renting a car or leasing it for a short period of time, it's something that is fulfilling that immediate need right then and there, but it's not permanent. It is a temporary thing. Okay, so I personally, let's talk about this. I have term life insurance on myself. Okay, but I didn't buy it. I'm renting it. Why would I do that? Well, when you've got a spouse and multiple children like I do, it gets to a point to where you need the most amount of insurance you can get for the least amount of money that you have to spend. Okay, you're trying to find the best value as far as purchasing power versus the amount of money that you're spending on a monthly basis or an annual basis. That's where term life insurance is going to come in, but they're able to give you that value because you have to understand if the insurance company is ultimately providing you a certain level of value, then it's going to have to cost them more money. So in order for them to offer you something that appears to have more value, they have to eliminate their risk. In order to eliminate their risk, they're going to say, we're only going to provide you insurance for a temporary amount of time. You're young, you're healthy. So if you were to pass away young and healthy, it's likely because it's going to be as a result of an accident or maybe some sort of illness that wasn't expected and that you were unlikely to get at such a young age. So you get a 20-year term policy, you're 20 years old, it lasts till you're 40. Okay. The argument a lot of times is to buy term and invest the difference of the money into something that's going to grow as an asset like stocks, bonds, mutual funds. Now, I'm not here to give you advice on those things, but what I am here to tell you is that with permanent life insurance, you're going to pay more money on a monthly basis, but that is something that you are purchasing because it turns into an asset when it starts to accumulate cash. It's going to last forever. You can get to a point where you have paid up insurance, meaning you've paid so much money into the policy that you can get to a point to where you don't owe any more money on the policy. You have no more premiums to pay. And the policy is yours. You own it. And it's going to grow in cash value. It's going to earn interest. It's actually going to build and accumulate, kind of like that home that you purchased. You've paid off the mortgage. The home is increasing in value. And actually, as a matter of fact, with most of the permanent life insurance policies, especially the kind that we sell here, we only sell the types of permanent life insurance policies that don't depreciate in value. So you're either increasing in value or nothing. Okay. But the permanent life insurance policies that we sell, as long as you're making premium payments, you're going to see that thing increase in value. And when you're seeing troublesome things happening in the market and the economy is going down and the stock market's crashing and price of housing is going down, the value of your life insurance is not going down. It's either slowly creeping along or it's growing quickly. And so the whole idea here is to really say what's what. I'm not saying that permanent life insurance is for you. What I'm saying is it's time to just call a duck a duck. Okay, if it walks like a duck, if it quacks like a duck, then it's probably a duck. So the obvious answer here is that if permanent life insurance isn't always bad. And so I'm here to essentially set the record straight. There are too many people out there nowadays that are saying permanent life insurance is always bad. But it's not always bad. Actually, it's time that a lot of the advisors out there stopped actually selling the insurance product and started selling what it does. Okay, so for example, if I was to tell you that there is an account that you can put some money in, that account is going to grow tax-free. That account is going to be worth a few hundred times the value of what you're putting into it in the event that you pass away. In the event that you put money into it for a long time, you can pull money out and not pay any taxes on it, and you can own it, and you could use it to pay for your children's college, or you could use it to fund your retirement, and it's not going to boom like stocks are going to, but it's going to be liquid. It's going to be yours and you own it. And as long as you make payments on it that upon the agreed upon amount, your policy is going to survive. Okay. If I was to explain to you that something like that is out there, most people would be way more open-minded to the idea of permanent life insurance. But it hardly ever is sold that way. Most financial gurus tell you to purchase term life insurance, which you're not actually doing. You're renting that insurance for a temporary amount of time and then leaving yourself at it exposed later on in your life in a position where if your policy doesn't have a convertible option, you're not going to be able to purchase permanent life insurance once that policy is expired, that term policy, right? Because if you've developed some health conditions, you might not be able to buy more insurance later. I run into way too many clients who are in their 50s and 60s where they had a term life insurance policy. Their policy expired, and now they're realizing we still have debts. We still owe a mortgage. Or something happened. We had a car accident and now we have a medical debt. Or maybe, just maybe, my husband has a pension that doesn't have survivorship benefits built into the pension. And so if they pass away, there's going to be a significant loss of income. Husband's 7 or 8 or 9 years older than the wife. It's very likely that the husband's going to pass away first. And they're wishing that they had bought a permanent policy that lasted forever, because now that term policy is expiring and they still have a need for insurance. So just for the record, everybody, This is just a short example or explanation as to why when you get term life insurance, you're not buying it. It is a rental. It is a short period of time. And most people who are a fan of purchasing insurance are also fans of the idea of doing what is financially savvy for them. And they are going to avoid renting a house if they can. They will likely avoid leasing or renting a car if they can. Most people who are believers in insurance are also a believer in not being in debt. Okay, that's why they have insurance, because they don't want to be in debt. Why would you avoid being in debt by renting something that isn't yours? Just think about it for a second. That's my thought on this today. And if you have any questions, make sure that you drop me a line on the video, comment down below. Even if you don't agree, that's fine. I've got 5 kids. I'm used to people not agreeing with me. It's okay. I'm thick-skinned. I can handle it. But I want to hear your thoughts if you feel like you want to expand on this conversation. But that's what I have for you guys today. So think about it. No one ever buys term life insurance there. It's a rental. It is a temporary thing. It doesn't belong to you. It belongs to the insurance company, and so do your premiums. Let me know if you guys have any other further thoughts on this. We'll see you guys next time. Thanks for stopping in.